senator stated today's big tech companies have too much power over our economy, our society, and our democracy. For reaction, let's bring in Natasha is Managing Partner and Director of Equity Research and Shareholder Engagement at Arjuna Capital, and Jennifer Rhee, who covers antitrust litigation from Bloomberg. Jennifer, let's start with just how seismic a policy change this actually would be in terms of the antitrust law that currently stands.
Yeah, I mean, it really is drastic, and I have to think on her part, on Elizabeth Warren's part, this is really aspirational, a starting point to land somewhere else. Because, you know, under current antitrust laws, we really aren't going and breaking up companies just because they've gotten big. We even tried to break up a company that acted in an egregious manner, clearly, you know, an extreme case, clearly anti-competitive. This was Microsoft, and the enforcers didn't manage to get that through the courts and managed to do that. We just haven't really been in the business of breaking up big companies since before the 1960s.
Let's get the investor perspective now then, therefore. Is Natasha, should the US be in the business of breaking up such large companies? There's an argument that it stifles growth. Do you think that's the case?
Well, I think it does. You know, I can't speak from the public policy perspective, but from the investor perspective, looking at not just, you know, financial metrics, but environmental, social, and governance factors at companies, we really do see some, you know, big problems with these large tech firms. I think Facebook in particular, you look at the company and it's gotten to a scale where, you know, the question becomes, is it too big to govern? Can the company effectively govern a platform with 2.3 billion users? And what we see so far is the answer is no. And it's not just that. The other question is, you know, with the kind of monopolistic power that a Facebook has, you know, it buys its competitors. There's Instagram, there's WhatsApp, and that then becomes part of the platform. And there's not the kind of innovation you would see. It's sort of those firms get brought into the issues of the big firm.
Interestingly, there, talking of Facebook, which Natasha brings up, Jennifer, Facebook has been looking to currently trying to integrate the back end of three key parts of its business. Facebook, WhatsApp, which it acquired, Instagram that it acquired. Some cynically saying maybe this is preparing to stop any sort of disintegration. Can we see the reversal of big acquisitions in such a way? You said it's been very hard in the past, but realistically, could this go through?
Well, the enforcers have in their power now to look at these companies and to determine whether they're doing something which is harming competition, which is anti-competitive. And they can come in and seek a remedy that could include breaking up a company. But as you say, one of the problems is once these companies get very integrated, they call it unscrambling the eggs. You know, it makes it very difficult to impose that sort of a remedy, and some other lesser remedy, you know, regulating behavior or something like that is generally imposed. And the courts are really unlikely to, you know, to agree to some sort of a remedy that's going to break these companies up and possibly have some unintended consequences that actually become harmful for consumers.
Natasha, Jennifer was making the point there that perhaps Senator Warren is sort of throwing something out there to be digested by the Democrats, to be digested by the population at large, and land somewhere slightly different. We can think about the Green New Deal, perhaps starting off a chain reaction, a conversation that therefore gets policy in place. What sort of policy do you think is needed? Is it as extreme as Elizabeth Warren is talking about here, or is it something a little bit less?
I think you're absolutely right. I mean, it's about setting a vision and moving the line forward. You know, I don't think that's where we're going to end up, but I do think that there's a fair case to be made, just given the size of these companies, that it does stifle innovation, it limits growth. And, you know, from our perspective as investors that are not just invested in Amazon and Google and Facebook, but more broadly in tech and in the economy, you know, we're looking for secular growth opportunities, you know, because we're looking to outperform our benchmarks. So it's important to be able to create an ecosystem that supports innovation and growth, and not get stuck into these more monopolistic paradigms which aren't really, you know, very free market in the first place.
So as an investor, would you want to see some of this disentangling?
I think there's a case to be made that some of it could be good from the investor perspective when you take a broader view.
Talking a broader view, talking of paradigm shifts, talking of starting a conversation, you have been pushing, particularly at Arjuna Capital, starting a conversation when it comes to the workforce, disparity in the workforce, ensuring that there is the gender pay gap that exists around the world is somewhat diminished. You've asked that, you've pushed for change at the likes of Citigroup, for example. And interestingly, I come from the United Kingdom, where this has been something brought upon by the government, insisting that companies of a certain size reveal their gender pay gap. How is this working for you? How is this working among companies? Is this message landing as you want it to?
Yeah, so I mean, one, I'm happy to be here on International Women's Day, and I think it's a good day to have this conversation. We've been engaging companies on gender pay equity for the last 4 years. At this point, we've moved 22 big tech firms, big banks, to reveal their equal pay for equal work numbers. So that's, you and I are working the same job. I'm a man, you're a woman. Are we being paid fairly compared to each other? But when you look at median gaps, and when you look at how the gender pay gap is measured even globally, women make 77 cents on the dollar for full-time work versus men. That's a huge disparity. It not only costs the economy $1.4 trillion per year, it's also it's a lost opportunity, because we're not putting women in high-paid positions. They're not moving into leadership positions, and it's something we need to look at really closely. So Citigroup a few weeks ago was the first company to reveal its global median gender pay gap. And that was 29%. It's not an attractive number, but we need to be honest about what these gaps are in order to create a baseline from which then to improve and measure progress. And we can't hide behind these numbers that, it's 99 cents on the dollar, versus peers. We need to look more broadly. So I've been, quite inspired by I think the bravery and the courage that Citigroup showed several weeks ago, and we're looking forward to the other 11 companies we have a shareholder proposal in front of on the gender pay gap this spring. Right now, those are all going to go to a vote of shareholders, but we'd like to see more leadership.
It's great to get transparency such as that being driven by your conversation, and indeed by the usual host of this program, Emily Chang's books and the like. We thank you for helping have that conversation on International Women's Day. We thank you, Natasha Lamb, for joining us, Arjuna Capital, and of course, Jennifer Rhee on all things litigation. Now, a story we're